Hi, we are from Group 6. Today we are presenting about challenges of audits in different industries.
Let's meet up with our group members. First,
we have Afika, Ain, Amila and Adia.
What is auditing? Auditing is the process of examining a company's financial records to ensure accuracy and compliance with regulations. It involves reviewing all aspects of a business, including its operations, internal controls, and financial statements. In today's world, audit firms faces many challenges. This is because the additional policies, like environmental, social and governance, ESG, make auditors need to check more things. Due to the fewer people joining the audit field, so firms try to use technology and automation to make work faster. There are also more rules that companies must follow. Audit firms also must handle all these problems themselves and also when they audit their clients. But one important thing never changes: auditors must always be good at finding risks.
Tenaga National Berhad is a large and highly regulated utility company, so auditors must review many different areas such as governance, internal controls, and risk management. Because electricity supply is technical, auditors often need specialists to understand the systems and operations. They also face challenges in ensuring management follows through on corrective actions. Overall, auditing in the utility industry requires more resources, technical knowledge, and strong monitoring compared to other industries.
Auditing in the banking industry is challenging because banks handle many complex transactions like loans, deposits, and investments. So, auditors not only check the financial statements, but they also need to review the bank's internal controls to make sure fraud or errors don't happen. They must assess whether the bank can continue operating, and check if the accounting policies and estimates made by the directors are reasonable. Auditors also need to use strong professional judgment and skepticism to detect any risks of misstatement. Finally, they must communicate any major problems, especially weaknesses in internal control, to the directors.
Next, I will explain about the challenges of audit in different industries. One of challenges is the difference in risks and regulations between industries. Industries like banking and healthcare are highly regulated. This means auditors must follow strict compliance requirements and understand specific laws. Meanwhile, industries such as retail or hospitality have simple regulatory demands. The argument here is that auditors must adjust their audit procedures according to each industry's rules. This requires more technical knowledge and increases the overall difficulty of the audit. Moreover, some industries involve complicated operations and heavy reliance on estimates. Construction uses long-term contracts that require judgment to measure progress. Then, for manufacturing companies, them deal with complex inventory costing, while financial institutions depend on estimates such as credit losses. The argument is that when operations and estimates become more complex, the risk of misstatement can increase. So, auditors must evaluate assumptions, test calculations, and judge whether estimates make sense. This takes significant time and requires strong professional judgment to avoid errors.
Then, industries like retail handle thousands of transactions every day, which increases the chance of errors or fraud. Meanwhile, industries such as agriculture or oil and gas deal with unique assets that are difficult to value, like biological assets. The argument here is that high transaction volumes require extensive testing and strong internal controls. For unique assets, auditors may need expert valuation to support their conclusions. Both situations add complexity and increase the effort required to gather reliable audit evidence.
We go for appropriate analysis and evaluation. For analysis and evaluation of audit challenges across industries in Malaysia. For your information, auditing different industries requires auditors to understand the unique business models, risks, and reporting practices in each sector. While the fundamental audit principles remain the same, the nature of transactions, level of regulation, and industry complexity greatly influence the audit approach.
Next, example of industry for analysis and evaluation. First is banking and financial services. For analysis is highly regulated by Bank Negara, Malaysia. Then auditor must check loan impairment, fair value measurement and risk-weighted assets. It also needs to large volume of electronic transactions that increases complexity. And lastly is for banking is digital banking introduces IT and cybersecurity risks. We move to the energy and utilities industry as we know TNB owns many large assets, for example like power plants, lines, substations. It also very high capital expenditure, CapEx. Then, needs detailed records for depreciation and impairment. Many asset types increase risk of errors. Lastly, estimates like useful life raise misstatement risk.
Not only that, for evaluation, banking and financial services, the auditors need specialist knowledge in financial instruments and IT systems. It also has to reliance on internal controls due to high transaction volumes. Then, poor evaluation of credit and market risks can lead to audit failures. Lastly, audit failures may affect public trust and financial stability. Furthermore, for energy and utilities industry, the auditor relies on engineering reports, valuation experts, and technical assessments. Then, inaccurate estimates can lead to misleading financial statements. More, increases audit time, cost, and reliance on professional judgment. As to sum up, different risks and regulations led to each industry adapt different laws, standard, requirements, business risks. Next, complex operations and accounting estimates required management to make significant accounting estimates as auditing these involved professional judgment, need of experts to evaluate management performance. Last but not least, high volume of transactions required auditor to use risk-based approach and data analysis to perform efficient and effective testing. While, for unique asset require specialized knowledge and audit PRPCE duris to confirm their existence, valuation and condition. Lastly, we have recommendations on this matter. First point is leverage technology, as it refers to the strategic use of advanced digital tools and platforms to enhance the efficiency, accuracy, and depth through the audit process. It transforms traditional, manual sampling methods into data-driven, comprehensive analyses of entire datasets, allowing auditors to focus on higher risk areas and provide more valuable business insights. Second point is specialized expertise, focusing on specific industries, complex subject matters, or types of engagements that require deep knowledge, whether technical or functional. Certain industries have unique regulations, accounting standards, and operational risks that require specialized knowledge. Auditors with specialized expertise enhance audit quality, improve risk assessment, and provide more relevant value to their clients. Last point would be continuous education and training, often referred to as continuing professional education, CPE, or continuing professional development, CPD, are mandatory and vital components of an auditor's career. This ongoing learning is essential for maintaining professional competence, adapting to the dynamic business environment, and ensuring the highest quality of audit work. Ultimately, ensuring adequate education and training is an essential step in maintaining audit quality and safeguarding the public interest by ensuring auditors can provide reliable assurance in complex and volatile sectors.
Welcome to a world where quality management and auditing procedures are the lifeline of the oil and gas industry. Dive into the intricate labyrinth of ISO guidelines, unravel the mystery of oil discovery, distribution, and sales. Imagine being the mastermind behind the audits that shape your business practices, fostering continuous improvement. Envision strategizing to mitigate risks and foresee future issues. Picture yourself creating contingency plans, ensuring the stability of a safe working environment. Get the chance to develop forecasting models, future-proofing your organization. Understand the implications of non-adherence to ISO standards, the safety of your employees, customers, and the wider environment. Strategically plan from audit results, improving profitability. This is your chance to tighten processes, meet ISO standards, and create wider profit margins. The world of oil and gas quality management is waiting for you. Are you ready to take the plunge?
That's all from us. Thank you for giving your time to listen to our presentation.